Well, we are off to another soft start with stocks in North America weaker today. The TSX already looking at a triple-digit decline, and we mentioned that we are very much on pace right now for the third monthly decline for the Canadian market. Just looking at the S&P 500, shedding another 0.5%, it has declined roughly 8% from its late summer highs. Let's bring in Mish Schneider. She's chief strategist at MarketGauge for her sense on what's going on right now. And Mish, we talked a little bit about the bond market and what it is signaling to the stock market right now. But what do you think is going on within equities? What's your perspective?
It seems that we've already seen, obviously, the pressure of the bond market, and a lot of people keep thinking that it's going to bottom, and it hasn't. So that has brought in buyers and then quick sellers. I think there's a volatility factor, and in fact, if you look at volatility, it's finally moving up. But also, clearly, the uncertainty of what's going on, not just now with Israel, but really throughout the whole world, there's a level of unrest that is picking up as opposed to abating. And I think the two things the market hates the most are obviously very high interest rates, inflation, so let's call it three things, which we still have, and of course, global uncertainty and geopolitical stress. And you can check every box right now. And
this all happening as we're starting to get a flood of earnings. And, you know, I highlighted a couple of things earlier. First of all, Wells Fargo strategist put together some stats saying that so far, we've only got a small sample to begin with, but so far it looks like there's a reasonable number of companies that are trimming their guidance versus those that are increasing their guidance. And then, you know, we heard the longtime bearish Michael Wilson of Morgan Stanley once again saying today that the profit picture is not going to justify investors making a big push into stocks at the end of the year. What's your assessment of what we're hearing from companies right now?
Well, John, I think that's a very good, a good analysis of what's happening with earnings. And a lot of people, of course, are looking forward to this week with Microsoft and Amazon. But the truth of the matter is that the guidance has been really where it's at. And the earnings, although they were projected to be better, we're down about 5% if you just subtract a couple of good stocks that have flown as a result of earnings, like Netflix being one. And it seems to me that the earnings, of course, we always look at it as sort of a lagging indicator, but what they say going forward, people are going to have to feel a lot of stress. A lot of these companies, except for the very few, don't really have the balance sheets to support these ongoing interest rates where they're at right now. And at this point, if you just look at the overall market, there are certain aspects of it that are signaling more recessionary. And so until we get some kind of a relief from somewhere, I cannot see earnings being a spectacular event that's going to save the market.
Okay, let's go through a few ideas you have for investors right now. One of them is Coinbase. We've been talking about how Bitcoin has had quite a bid recently and pushed through 30,000. There's a lot of excitement on the ETF front in the United States. Why do you like a stock like Coinbase right now?
Well, for one, the whole idea of an ETF for the Bitcoin would be obviously a positive for Coinbase because it'll trade through Coinbase. So that's one of the reasons. And it's held up amazingly well through a lot of the gyrations in the market right now. It's been kind of range bound between 70 and 80. So it would be something that would, I think, better if it gets over 80 and it's kind of smack dab in the middle as we speak. But overall, what's really happening, I think, here with the cryptocurrency space and some of the altcoins, well, like Solana and Chainlink, is that it's starting to decouple, to use an overused word, and showing that it actually may be more of a flight to safety and a store of value than what people thought. And that's given all of the negative news that it's had for the last couple of years.
Meanwhile, another name on your list right now is 3D Systems. When we think about 3D printing, I mean, I know there's a lot of excitement around artificial intelligence these days, but 3D printed just about everything, including homes. You see these viral videos. It's pretty incredible. 3D Systems is a stock that has struggled. What is it that catches your eye with this one?
Well, yeah, the 3D space, it's amazing to me because it really can help, especially if we have a major raw supply issue, because it can 3D print houses, like you said, and it can do a lot of things, and it has done a lot of things in aerospace and also in biotechnology. But this stock, in and of itself, looks awful. I mean, it's trading at like $4.35. But what I think, and this is just a sense, but I feel that the IP of that company, as they were the first, and really have an IP for a lot of great invention, could be worth something to somebody. There were already explorations of them being bought out a while ago, and it didn't happen. They rejected a $24 a share price, which I'm sure they regret right now. But I still think it's a possibility. And you have to wonder how much lower can that stock go from here.
And before I let you go, on your top ideas list, you also included an ETF that tracks Vietnam. And I'm looking at performance for that market this year. I guess if you were to compare it to a lot of markets around the world, there's something to talk about there.
Well, yes, it was doing spectacularly well, and it's been a place where the U.S. has gone for a lot of manufacturing, and it's a very industrious country. The reason why it slipped was along with China, and from what I understand, China was putting some pressure on Vietnam on where really does your alliance lie. But nonetheless, if you just look at the country in and of itself, the type of goods that it can produce and its ability to manufacture cheaply could become more and more attractive. And the chart itself is showing relative interest. I'd want to see it hold 1235, which was the low of last week, and get through 13. But if it does, I think that can outperform the U.S. markets for sure.
Okay.